Hello, I'm Matthew. I'm a Chartered Financial Planner at Wealth Advice, and today we're going to look at the recent budget from Friday and consider points that might impact yourselves. It's also worth noting the immediate reaction to the budget. We've seen the value of the pound fall to record lows, and this has led to a recent statement from the Bank of England saying that they won't hesitate to raise interest rates if it's deemed that that's what's required to curb inflation. We'll go on in a future market update to look a little bit more on the reaction to the budget and the performance, but in this video we're going to focus on what was actually announced in the budget and how that will impact yourself. So starting with income tax, high level there'll be a cut of income tax from 20% to 19% of that basic rate band as of April 2023. So that will impact people who are earning above the personal allowance, whether that's from income from work or pension income, anywhere between that personal allowance and the top band there of 50,270. Above 50,270, there's now going to be a rate of 40% that's applied for everyone. The higher rate income tax band of 45% has been abolished. Looking at national insurance, there has recently been a change to increase national insurance. That will be reduced back from the 6th of November. There was also a proposal to think about how the NHS was funded and to add a new levy. Again, that idea has been removed as part of this emergency budget. In relation to corporation tax, this is one area that the government feels growth and development can be pushed through by allowing corporations to pay less tax and then potentially invest more into projects that will take the economy further. The high level rate here is reduced from 25% down to 19%. In relation to pensions, I know this is an area that you'll be particularly interested in. In reality, there weren't any exciting changes. There was no changes to the tax relief or the allowances that were mentioned in the emergency budget. There was some technical points to say that the basic rate income tax of 20% that's reducing to 19%, if a pension scheme claims that via relief at source method, they'll continue to be able to do that at the higher figure of 20% for another year up to April 24. There was also some headlines in relation to increasing investments in UK pensions into UK assets to help boost the economy through more investment in science and tech companies. In reality, that will impact large institutional pensions, for example, the defined benefit pots. So for the majority of our clients, they won't be impacted by those changes. When we look at investments, again, there wasn't large changes to investments. The one element we've got here to think about is seed investments into new small companies. The amount that people can put into these and benefit from tax relief has increased. So again, for those of you who have a higher attitude to investment risk and like investing in new companies and benefiting from those tax breaks, that might be something that we'll be talking about with yourselves in the next review meeting perhaps. Stamp duty is an interesting one. There'll be no stamp duty on the first 250,000 used to purchase a property. And the interesting point here again is for first-time buyers, this increases to 425,000. So these changes have been announced and come into effect immediately. So for any of you who are looking to buy a house, or if you've got children who are buying their first house, that's some good news for them in relation to stamp duty. When we look about energy, I think that's a key concern for a lot of people at the minute. The government showed their commitment to say they want to reduce wholesale energy costs for UK businesses, charities and the public sector, as well as that price cap that's been announced for UK households. In relation to shopping, there's been a change in relation to VAT, and a few of you might be interested in the duty rate change for beers and cider. This has now been cancelled. It was going to go up slightly, but they've, in line with the national insurance changes, they've rolled those back down to try and keep tax low where possible. In relation to strikes, that's something that's been hitting the headlines a lot recently in terms of rail strikes and postal strikes. The government are trying to be a bit harsh here and say there'll be legislations which require trade unions to put offers to their members so that it's not as much chance of strikes being arranged quickly to have large impacts on the economy. Finally, there have been no changes in relation to capital gains tax or inheritance tax. As a high level, the news will pick up on the tax cuts for income tax, national insurance being rolled back, and corporation tax. But for the majority of our clients who are taking pension income and are considering things like inheritance tax, there wasn't a lot of changes in this budget. As always, how these changes are received and how they're actually implemented in the real world will be interesting to see, and in our future market updates we'll have comments about that. As I stand here today, I was already reading that the Bank of England are thinking about increasing interest rates as a reaction to the weak pound that we've seen. So it might be that this budget does prompt more changes, and even the Chancellor over the weekend hinted that there might be some more changes to come. As always, if you've got any questions, please get in touch.